Today is tax day. The Treasury Department extended the filing deadline to July 15th in response to the coronavirus pandemic. But for the 142 million plus taxpayers who've already filed, this may also be a good time to start planning for 2020. Earlier, I spoke with CBS News business analyst Jill Schlesinger to get her tips.
Okay, Jill, it is tax day. The question that I have is it too late to file an extension?
It is not. And it's not even too late to file your own taxes. I mean, you do have until midnight tonight. And I would encourage you, even if you feel like it's going to take a long time, maybe you're overestimating this. Perhaps there's a chance that you can get your taxes done today. And if not, yes, you can file an extension, Form 4868. Just go to irs.gov. And that form gives you an extension until October 15th. But, and Vlad, I know you know this down to your core, there's always a thing, a but, that comes with the IRS. And here's the big but. If you owe taxes, or you think you will owe taxes for 2019, when you file this extension, you have to estimate what you think you owe and pay the IRS anyway. And the reason you're doing this is to try to avoid any penalties or late fees.
So there are a lot of things that will feel different, I suspect, for many Americans this year, including the fact that so many more people are unemployment and receiving unemployment checks, unemployment benefits. Also, some people who receive stimulus money. So what should people in those categories worry about?
Well, remember, that's not for 2019. So this is a 2020 event. So here's what you need to know. First of all, the stimulus checks, the economic impact payments, those are not taxable. So breathe a sigh of relief. There is a tiny fraction of people who may see some of that money taken back here because they no longer fall into the category of being eligible. But again, that's a small fraction. For most people, the stimulus checks, not taxable. However, unemployment is taxable. Your state unemployment check, as well as the federal $600 a week, that is taxable. And you don't want to necessarily run into a surprise next tax year. So you should know that. A couple of things you can do. One is you can actually have 10% of your federal benefit, that's $600 a week, you can have that withheld. Some states allow you to withhold on the state benefit, not all states, but you may need to withhold more. Maybe it's going to be less. If you don't have withholding done, try to keep a tiny little kitty set aside for taxes next year.
All right. And what about retirement accounts when it comes to the CARES Act? Are there tax implications there?
There are, and there have been a number of changes, not all of them that I'm in favor in. So I'm just going to come out of the gate. I'm coming out of the closet as not a huge fan of a lot of these measures, okay? As a certified financial planner, you know, what is my whole mantra, which is get money in those retirement plans, keep it in those plans. The CARES Act did allow some room on taking money out of retirement accounts. And what is important here is that this should be a last resort. Please don't just go to your 401k or your IRA and yank money out. The big change is because of the CARES Act, if you are impacted by COVID-19, it's not just anyone, you have to actually swear that you've been impacted. You can take money out of your retirement accounts if you're under the age of 59 and a half and not pay that 10% penalty. That's huge for a lot of people. The other aspect of it is if you do withdraw the money, there's certainly tax due, but you can spread the tax due evenly across the next 3 years. So that's the big change on withdrawals. Loan amounts have also been changed because of the CARES Act. You can withdraw instead of $50,000 up to $100,000. And again, there are more generous opportunities for you to pay that money back. But here's what I want everybody to understand. Once you pull that money out, it is awfully hard to get it back in. So again, this is the break the glass scenario where if you really have no other money, then okay. But otherwise, please try to keep that money set.
Jill Schlesinger, thank you very much.
Thank you.